The way that our process works, and we almost handle it all, there is one little caveat to that. The way that our process works is we do the eligibility analysis and we do the calculation. So we do the full determination on your eligibility with audit documentation, demonstrating the exact government orders that impacted your business. And then with the assessment on eligibility that comes from that, along with calculation of the credit applying the different rule sets for 2020 and 2021, so that we can have itemized worksheets that detail the exact amendments that need to get made on the 941Xs. The 941Xs are how you monetize the credit. So you amend your 941 federal tax return, turning it into a 941X, and then you submit the 941Xs per quarter of eligibility to the IRS, and the IRS then confirms and issues refunds on those overpayments. You demonstrated overpayment of taxes from the 2020 and 2021 year, and then the IRS confirms that overpayment and issues a refund, or the Treasury Department issues a refund based on the specific claim in that quarter. And then the part that so I was mentioning the one thing that we didn't do in-house, and so it's just part of the process, and I would consider it as part of the process. So I don't want to. Some firms are able to do this in-house, and we don't particularly do it in-house. We like to work with our clients' pre-existing CPA or the in-house accounting they might have, etc. And that's for the amendments themselves. We are able to itemize the exact changes that need to get made. The reason that we don't get to do that particular aspect in-house, even though we have the capability to do so, is because we charge on a contingency basis. So if some firms work in different ways, because we charge on a contingency basis, we don't do the 941Xs. Firms that don't do that are potentially able to do that in-house. So and then what do we charge was one of the questions, and we have a scale. It depends on if the business is a nonprofit or a for-profit, and depends on the size of the business. But for businesses that are under 100 employees in size, that are for-profit businesses, our rate is 15% of the credit. And one of the ways that we try and differentiate our firm is that we only ask for our fee after the client receives their full refund from the IRS. A lot of other firms are set up where there's a percentage of the fee is due up front, or the whole fee is due up front. The way that we work is our fee is only requested after a client receives their refund from the IRS. And then, like you were mentioning with the potential tax liability, that also would not occur until after the refund is realized by the company. And and while it itself is not taxable, the deduction on the wages would then become taxed. Become an object, needs to become taxed, and therefore would increase the burden for 2020 and 2021 if you receive refund in those years.
Right. And it's your idea, or did you just say that the tax liability for omitted prior year returns would not be due until you'd received the funds from the IRS?
Right. And the way that I understand it, the information that I have is that those also wouldn't have incurred a penalty or interest amount as a result either.